Good morning, everyone, and welcome to the European crossover webinar. And today is FOMC day. Today's FOMC day, so I don't think we're going to get the fireworks that we did yesterday at this exact same time when all of a sudden the euro was trading at 12.46 and we just started to go and tumble. But it's a relatively quiet morning. We'll see how the FOMC comes out. I have mixed feelings on this now because I thought that they'd be rather, dovish, and they may to a certain extent, but with Trump over there pressuring them, and then the FOMC, them saying they should not be bullied, and then the story broke out that Trump, the administration was trying to either get rid of or demote the Fed chief, Jerome Powell. So I think there's a bad taste across the board. So not so sure how accommodative they're going to be willing to consider being under these circumstances. But it's very quiet. We do have the dollar index, still up in here. I would have thought, like I said, we would have pared back, but obviously, as the saying goes, if anything happened on the way to the Palladium, Draghi in his Sintra speech opened the door for all kinds of options and alternatives that the ECB can do. And then on top of that, then, as I mentioned, Trump sticking his nose into the Fed, and then the stories breaking out about trying to get rid of or at least demote Powell, then that just probably strengthened the resolve that they won't do anything, although I think they'll still lay the table for the potential cut because, once again, reports have been weak. Economic data has been weak overall, with the exception of retail sales. University of Michigan was weaker, not that much, but for the most part, you look at that, PMIs, the New York Empire Index. It's one after another, and NFP. They've all been weak. Some far more weak, like the PMI from a few weeks back. But we'll move into the morning bid and we'll see where we stand. Even on the way out, Draghi calls the shots. Although largely confirming what financial markets had guessed for months, the European Central Bank President Mario Draghi's strong hint yesterday of more stimulus to come really set the cat among the pigeons. Beyond prompting an accusation by Donald Trump of Eurodollar rate manipulation, his comment at the ECB's annual conference in Sintra, Portugal, even caught other ECB policymakers by surprise. No specific measures have been discussed by the bank's governing council, where there's no consensus on the route ahead. What's more, the move came just weeks before Draghi is due to step down, prompting some ECB watchers to suggest the effectively committed this successor to easing policy even before the identity of that person is known. Some seem to argue that Draghi was simply caught between a rock and a hard place, with the escalation of global trade tension forcing him to make more explicit his previous suggestions, or likely easing ahead. With the field narrowing down to 5, the UK Conservative lawmakers today hold a round of voting in the contest to replace Theresa May as party leader and prime minister. The candidate with the least votes will be eliminated, with the result around 6 p.m. local time, 1700 GMT. Separately, the Times reports the opposition leader, Jeremy Corbyn, will back a move to the Labour Party to change his Brexit policy and support a second referendum in all circumstances. The shadow cabinet will discuss on Wednesday a plan to make Labour's stance decisively pro-Remain, it added. There have been signs of a shift in Corbyn's fundamentally Eurosceptic stance, but whether he will move this far remains to be seen. Let's move into the markets. Who can coo the loudest? The world central banks appear to be outdoing each other with dovish signals about the future monetary policy and the stimulus efforts, seeking benchmark governing borrowing rates and lifting world shares, just as some sign of detente on the U.S.-China trade war emerge. Preempting the U.S. Federal Reserve's expected rate cut signal tonight. So, wow, they're saying, expected rate cut signal. Tuesday's speech by European Central Bank Chief Mario Draghi came across to many investors as another whatever it takes moments. Stressed as he did the ECB's willingness to use all monetary easing tools from yet another rate cut to a resumption of its 2.6 trillion euro bond buying program aimed at reversing a collapse in Eurozone inflation expectations. Draghi's speech sank 10-year German bond yields to record lows of almost 0.33 tenths and plunged 10-year French, Austrian, and Finnish government equivalents below zero for the first time. The currency market was limited with the world's two biggest central banks now looking set to ease in tandem, but the main euro-dollar transatlantic exchange rate did not fall below the 112 and even drew the ire of U.S. President Donald Trump, who lambasted Draghi on Twitter for trying to weaken the euro for trade purposes. European and global stock markets have tapped up the central bank's largesse. Nonetheless, European stocks staged their biggest one-day gain since mid-January, rising to six-week highs, and Wall Street and many indices at about 1%. U.S. Treasury 10-year yields fell to close below 2%, their lowest since 2017. Draghi's broadside could at least be seen as partly successful in pushing the five-year toward inflation expectations up almost 10 basis points to more than 1.2%, their biggest one-day rise ever, but still shy of the ECB's medium-term inflation target of just under 2%. ECB sources told Reuters late Tuesday that they will a little taken aback by the strength of Draghi's speech and now fear it will be difficult not to deliver something in July. Draghi and the other ECB officials speak again today at their Sintra conference. With the Fed decision awaited tonight, markets are now looking for similarly aggressive statement of intent, although there's some trepidation that there's so much easing that it's now priced that the Fed are rising that the markets risk being disappointed. There were signs that one of the main reasons for easing the escalating U.S.-China trade war may see some movement toward resolution. Beijing and U.S. officials confirmed Trump would meet Chinese President Xi Jinping for one of its talks at the month's G20 summit in Osaka. Asian stock markets took the whole picture positively. Shanghai, Tokyo, and Seoul all rose more than 1%, and Hong Kong and Hang Seng gained more than 2%. 10-year Treasury yields backed up over for overnight lows before the Fed decision, but the yield curve between the 3-month and 10-year remains inverted by 17 basis points. The dollar's index held most of Tuesday's gains, although China's offshore yuan and emerging markets generally outperformed after the central bank's dovishness. And that kind of gave us a good, nice, rounded thing for today. Let's move into the dollar moves to 2 weeks highs. We already know that, where the greenback can retain its strength after the Fed's two-day policy meeting. Fed is widely expected to stand pat on monetary policy, but the door is open for an interest rate cut remaining in July. The market has mostly priced in the July rate cut, unless there's a biggest dovish surprise at the FOMC. But there's a lot to digest at this FOMC, such as the Fed's view on the economy and prices and Powell's comments. It's hard to tell which of these factors the market decides to latch on and react to. This prospect of the U.S. Central Bank lowering rate has also driven benchmark Treasury yields to near two-year lows. The common currency dropped along with a decline in German government bond yields, which hit a new record low on Tuesday after ECB Draghi said the bank will need to ease policy again. A closely watched German zoo Institute showing that the mood among German investors had deteriorated sharply in June also weighed on the euro. So let's go and move into the bias chart, see where we're standing here. Well, looking ahead, the key level of where something would really happen, let's say the Fed should whatever easiness or whatever, is going to be this 1262, because this is what really opened the door for us to break even lower the other day. So it's going to be 1262 would be the key level here. On the downside, it have to be this 1130. Actually, just a hair right there. It's called 1128. These will be the two lines of demarcation. Everything in the middle is just going to be stuff in the middle, essentially, where the market can go, bounce around. Obviously, this is going to be where rubber meets the road, 1128. Doesn't mean we couldn't overshoot past that, but you'd be looking for that area to be defended, as well as the 1262 if you could reclaim that. Let's go move into the cable. Well, tomorrow's going to be BOE, so we shall see how things come out. And the whole thing with the markets being concerned with Boris Johnson. See if we can't see something a little bit lower here. Well, 2503 is the 127% extension. With 2432, the 161. Let's just go with this 2485. We'll go right here. Just a hair high right there. 2619. Let's go 2619 on the upside. Well, our bias chart here is 68.31 pretty much held to the pip. I think it was really off by 1 pip or half a pip on the Aussie dollar. We'll keep this 68.31, and then on the upside, The low was 32, so we're up by 1 pip. We'll go with 69.23. Moving on to the dollar CAD. Speaking of which, we do have data at the bottom of the hour, core CPI out of the UK, and coming into the States, we do have a Canadian CPI today. That'll be key. We have gone just a hair below this trend line, and we're also below the 33.82. On the upside, remember we talked about this, we would need 2 consecutive daily closes above 34.12 to get the bulls giddy. That's what we had put here. Would require 2 consecutive closes above 34.12 for the bulls to get giddy. 34.41 is a 61%. So let's go on and use this as our bias chart resistance, 34.41. I think we may have had that marked off anyway. Yeah, right there. Just in case, I mean, if dollar gets going, then I think that's where they'll go for. They would take out these highs. Now, whether they could retain it would be another story, but that's what we'd be looking at. Now, as far as support, support would be right there, 33.25 for right now on a very short-term basis. 33.25. Obviously, if for some reason the Fed would be dovish, we'll start pushing below that, but that's your first key area. The market might bounce off of that. Well, there's nothing happening here in the dollar peso, absolutely nothing. And there's no changes here. What we've been calling, I think, actually since last week. I mean, the only thing we did was adjust the downside a little bit. It still remains the same, 1903, 1923.6. No changes. We'll go moving to the dollar yen. This can be relatively quick. We're going to have some comments afterwards, but yeah, markets are relatively quiet. These ranges are stuck. We're going to have to see, what happens in the comments afterwards. So on the dollar yen, the upside would be 927. That's on the extreme. But they're going to try and make that move. They could blow some stops. It's a bit of a stretch there. We'll just go with 891. 891. And on the downside, we'll go with the 790. This one I don't have a very good feel for this dollar yen right now. Now let's go move into the cash dollar index. This one is very interesting. Depending, most expect the Fed to hold pat. The key is going to be the comments and what Powell says. Just tricky stuff. I think you got to be very, very careful upon the release. For right now, let's go with this 98.17. There's support right there, 97. Obviously, if the Fed were to take whatever action, boy, we're going to see things really get pretty nutty, but it'll be 97. And with that, we'll go and move into the cross rates. See a nice pull up here on the against the Aussie here. And look at the silver gaining here. Look at this. And against the guppy here. That 161 held like a champ. Look at that. I mean, it just took it out by a few pips. Oh, since moved back. Covered off this. We'll go and put these ahead of the UK data, CPI data. So we'll go in and look here at the QEN. And this one stayed relatively quiet overall. Let's pull up the 70-20, and we did get down to 70-27. That's still going to remain. And on the upside, we had 70-82, and we made it up to 70-98. This is key right here, this 7102. So let's go mark this off for 7102. And we'll take a look here with the euro yen. So on the downside, we had 2112. The low was 2107. And on the upside, we had 2162, and they got up to 2168. We have the opportunity to go and move a little bit higher in here. I don't want to go overboard, but at least for today, it's going to be right here, 2188. Support's going to be right there at 2118. Okay, we're going to go and take a look here with this UK data that's going to be coming out. Here's the guppy after holding the 161% and sterling versus the odd and the cable to the far right. Here's the data that's going to come out. Try not to cover up the guppy. There we go. Obviously, the key resistance coming up right now is this 3650. Here on the guppy. There you go, right there. And sterling versus rebound area here, looking right here at this 83.23. There we go. Now we got data out in another minute and a half. Relatively quiet morning. Very, very quiet. As I mentioned, not a whole lot to say. We've already kind of said what we had here for the FOMC because a lot of the surprise has been taken out now. I mean, with everything that's gone on with Draghi kind of upstaging things with his talk at Sintra, then Trump trying to pressure the Fed, and then the story about him also trying to fire or demote Jerome Powell, and then also the thought that there might be something resolved at the U.S.-China deal. So it's kind of taking the shine off of the apple going to the FOMC. I think it's also limited what they're going to be able to do or willing to do, I should say. Data's out in another 18 seconds. And there we go. 2/10 right in line on the core CPI. And not really a whole lot of change here. Look at that. Look at cable here. Sterling versus the odd. Look at guppy here. Nothing. Whole bunch of nothing. So no reaction. Finally starting to see the starting VRCI move up a little bit, but what has it moved up? 9 pips. And Guppy's trying to move up a little bit here. Amanda says she's watching 2603 in cable. You can see it right there. Well, let's go and move on. It was rather disappointing. I thought we'd seen a better reaction. And moving on to Euro Aussie. Well, we saw this market really come off. Resistance, I guess, we'd be looking at around there 63.69. We'll take a look here a little bit closer. $63.69 would be confluencing with the 50% at $63.65. Market is pretty oversold, but Draghi has, with what he's talking about, you wouldn't expect the euro to get a whole lot of lift. Although this has been impacted quite a bit. We talked about that when you look at the euro versus the dollar. So if the dollar were to come under pressure and push the euro up, although I think it'd probably be only temporary in light of everything and expected action that Draghi's stating, so a lot of good resolution, a lot of good resistance at that level. So resistance is going to be right here at 63.45. With support coming in this whole area because we're pretty oversold. $62.75. Right there. Let's go to Euro Kiwi. This is still hold up fairly well. Although we did get, we went right here to the pip. This is our, if you want to call it our target, so to speak. We had 73.09 confluence with 73.05. We came up and I think we missed it by literally 1 pip. And we came right down here to this level, the 71.31, hit that to the pip. Let's go and look at this on the 2-hour chart. We've actually got as low as 71.28, 27. We'll go right here, 7209. Support coming in right there, 7140. Let's go move into the ASEAN. Well, we finally made it down here to the 7402. We've been talking about that. And we called it the death spiral. And we're looking for at least a little bit of support at 47. And they kind of held it a little bit, but they eventually made it down here to 7402. Actually, looks like they took it out by 8 pips or so, but it's held. Let's go on and move into the 2-hour. That 74.2 is huge weekly support. We'll go back to this again, 74, we'll call it 74.05. In case they go back down there, definitely expect them to defend it. Resistance comes in right there, 74.80. They're called 74.82. And let's go move into the guppy. Well, this is we had this as the 161% and held that well. I don't know how much worse it says can get, but again, I guess you could have said that here and here and here and here. Let's take a look at it here on the 2-hour chart. You can see here we're trying to make some kind of hold here. We'll go and go right there with 35.55. Maybe we can do a little bit better than that. 35.71. If we do get something a little bit, get a nice little bump up in here, let's go right there with 36.69. And lastly, with sterling on. if we can get a little pop here, right there, 83.53. I'm not going to give it that much room. 83.53. Support's pretty clear, 82.47 here. And that's the bias chart on a relatively quiet morning on FOMC day. We'll go move into the main screen. I think today's rather interesting. I think initially I would have thought that the Fed would have laid the table quite dovishly for July, but a lot of things have changed. Obviously, Draghi's speech kind of flipped things around, and instead of laying the groundwork technically for the dollar to weaken, with Draghi coming out and mentioning all these things that they can go and do, that certainly weakened the euro and by de facto has pushed the the dollar index higher because, as I mentioned multiple times, the euro comprises 56.4% of the cash dollar index. So, of course, if Draghi comes out and knocks the euro down, well, of course, it's going to can't help but push the dollar index up. Not that it wasn't already up higher, but my thought was, hey, look, they can be rather dovish. They're going to lay the groundwork for the move for July, and then the dollar could slide. Well, even if the dollar slides, I'm not sure a whole lot how hard it can slide initially by them just simply laying the groundwork. The key is going to be really in his words and comments afterwards. Because if the Fed were to begin cutting, they're not going to do one cut. One cut leads to another cut. They've seen that. So that's what the market will be betting on, that it's not just going to be one cut. There'll be multiple cuts. And then in the tightening cycle, not really necessarily tightening cycle, well, yes, but I'm saying compared to where the ECB is, then the dollar could certainly fall further once that begins to to take place. But we're not there yet, and there's a lot of room between, or a lot of road between before we get there. So, when we're looking into the FOMC decision, I definitely wouldn't want to be taking any shots until once we get the talking. I'm probably still going to do something, but we'll have to see what the reaction is. As far as the daily wrap up, that's going to be at around 1:30 Eastern, about a half an hour before the FOMC. We'll just do a quick look-see on that. Really, I don't think there's going to be much of a change. It's probably just going to be just pretty much the same thing, but for those that missed the European crossover, we'll be doing that at around 1:30 Eastern before the FOMC, just a quick touch on where things are. And that's all we've got, but thanks for joining us here on the European crossover webinar.